Hello everyone, welcome to the market outlook for the week. Gaurang Shah here from Geojit Financial Services, and as we begin the week, we have continued the downward movement which we saw last week on Friday. And as I speak to you, the levels on the Sensex, Nifty and Nifty Bank are 52,870 on the Sensex, down about 1,430 odd points. Nifty is trading at about 15,780, down 415 points. And the Nifty Bank trading at 33,300, down about 1,150 odd points. Now, this is basically led by the inflation fears. Primarily, what we saw the numbers coming out from the US, inflation was at a 40-year high, and that has actually spooked not only the US markets, but the markets across the globe, including Europe, Asian markets, and our markets. And the follow-up of that fear is that we have again opened downward this morning when we got back to the work terminals. So fear is that we could possibly see a little bit of more correction till the time there is a little bit of stability, and the stability will only come in form of the actions which will be taken by the respective central governments. US Fed, the meet is on 15th of June, and there is all possibility of a 50 basis hike. How are they going to tame the inflation is what remains to be seen. On our domestic front, the data points that will emerge is with respect to the CPI and WPI. Data will be coming out later on today and tomorrow. We'll be eyeing over there, but the expectation is that the domestic data with respect to inflation could be a little bit of much more in the comfort zone rather than what we've seen on the higher side as far as US is concerned. On the energy basket, we've seen a downtick, $120 a barrel on the Brent, $118.50 a barrel on NYMEX. But the worry, one more worry if you will friends, is in form of the depreciating rupee against the dollar. And it's not that it's only restricted to the Indian currency, Indian INR. Currencies across the globe have seen tremendous downward movement against the dollar, and there has been historical lows that has been witnessed by various currencies, including the Indian rupee against the dollar. On the correction front, the view is that these levels where we are, 15,700, 15,600 on the Nifty, or 52,500 or thereabouts, or 52,000 on the Sensex. Friends, these are the levels that were seen way back in June 2021. We've started consolidating in this zone, and that consolidation lasted up to end of July. So you've seen a long 2 months of consolidation when you talk about Sensex and Nifty. Last year this time, that is June and July 2021, if you just reflect upon the Nifty chart, you will see a 2-month consolidation period. So these are very crucial levels where we are. When it's very important that we stay at these levels and don't give up to further downside, because if that happens, then the downward movement would possibly take us to 14,500 or 14,800. That's the next kind of consolidation zone that we saw beginning of 2021, that is somewhere in Jan and Feb we saw these kind of consolidation. So from those levels to the level that we saw all-time high, and then the correction that we are witnessing right now. So the most prudent thing to do in this kind of market is, but naturally, stay away from short-term, medium-term trades, because these markets are very difficult to trade, and even if you take a one-sided view, then it becomes all the more difficult. And more importantly, after seeing this kind of correction, one will ask a question that will there be a bounce back, and whether that bounce back will be sustainable. So these are all questions that one needs to ponder over, and according to my understanding, since we saw this consolidation in June and July 2021, for me, I think it's primarily important that we don't give off these levels of 15,500 or 15,700 or 15,800 where we are trading. So it's going to be a very important 200-300 point zone on the Nifty to watch out for, so and so forth for the Sensex. But of what we've seen on the domestic side, IIP numbers on domestic front were good enough. There was nothing scary over there. And if the inflation numbers on the CPI and WPI today and tomorrow do not spook us, then I think we should possibly breathe a sign of relief. In this kind of unforeseen circumstances, it's very difficult to preempt what the authorities will decide upon, whether it is the government or whether it is the RBI moving out of turn once again, because we just saw a credit policy wherein there was increase on interest rate front. But I think one of the biggest problem for most of the economies or most of the countries is the inflation number, and of course the interest rates moving up north. Thirdly, bitten by the boiling crude oil prices. So all this is a mix of lethal combination which definitely plays an havoc on equity markets. But wisdom and prudence tells me that these are the kind of levels that you should possibly look at long-term investment horizon. And with that kind of a view in mind, my sense is ITs, banking, private sector bank, NBFCs, select auto stocks, there has been turnaround. Some of the names in the FMCG pack, metal, cement, I think broadly these are some 5-6 sectors which you should start nibbling in. And nibbling means don't put all your money at one time. The unfortunate situation that we are in commands a very prudent approach towards investing into equity market, and that is step by step, slowly, steadily go on, putting money. Buy firstly, primarily the focus should be on frontline stocks, and then select mid-cap ideas in IT, in private sector banks, in NBFCs, in select metal, cement, and even FMCG. So broadly speaking, I do not rule out some more correction from here. And for me, I think it's going to be more important to holding out on 15,500. If we give out those levels on closing basis, then maybe there could be a little bit more deeper cut in the markets to come by. But one has to brace these kind of corrections with a little bit of more courage and look at it as an investment opportunity rather than short-term trading opportunity. On the crude oil front, expect these levels to stay unless and until you have a meaningful uptick in the output in terms of production by OPEC plus nation, which they have promised will come through. But again, one needs to just wait and watch. The other fear, friends, is in form of the pandemic. Again, the numbers are increasing in Maharashtra, Mumbai, as well as in Delhi and some other cities. That's a little bit of concern. And of course, the news flow from China with some cities again going into lockdown. So these are some of the triggers that are possibly driving the market on that. And of course, not to forget the sell side figure from the FI is again in the month of whatever we've seen in the month of June, there has been historical high number once again. But the strength of purchasing power which we have witnessed from the domestic institutions thanks to the retail investors' participation, I think this should possibly hold us a little bit afloat. Be very, very cautious. Don't go into short-term, medium-term trade. Avoid these trades because the markets are difficult to trade. Look at long-term investment horizon, and that's where money has been made. I wish you all the very best. Thank you very much for your patience, Eric. Stay safe, and I'll see you again next week. Bye-bye.